since leaving Cornell, I started Hello Tractor. We're an agricultural technology company, and we started the company really because we were interested at our core in increasing farmers' income. And one thing that we saw across sub-Saharan Africa and across the emerging markets really is that farming is dominated by these smallholder producers. Many of these farmers don't have the access to machinery or labor in most cases to plant on time, cultivate the land that they have access to, and increase their income. And so we created first a tractor manufacturing company, which was a terrible idea and extremely difficult to manage for somebody who knows nothing about manufacturing or tractors. So if you want to know what not to do as a business or how to approach a pivot when you're managing a business that's not moving as fast as you need it to move and as fast as your investors need it to move, come talk to me, because we made a lot of failures when developing out Hello Tractor and the concepts that we now offer into the marketplace. But what we ultimately landed on is a technology platform that bridges the divide between smallholder farmers who need tractor services and tractor owners who have the capital and wherewithal to purchase machines. But before I get into the technology, let me paint some background picture. The vast majority of farming in Africa is done by smallholder farmers, primarily women. And these women generally plant late, they undercultivate, and largely because of a lack of access to labor. But these women are extremely important because the world needs more food. And to grow that food, we need either, I know we have some intensification people in the room, but bear with me for the folks who are really focused on technology at a different scale. The world either needs more production on the existing land for the intensification people, or we need more land area under production, approximately 280 million new hectares of farmland. And sub-Saharan Africa has a ton of land, 600 million hectares of uncultivated arable land. That's the farmland in the EU and the US combined. Actually, it's more than that, slightly more than that. So it's a ton of land available. It's a huge resource, and obviously a great business opportunity too. But currently it's being underutilized. That land area represents 60% of the global total. But unfortunately, the people responsible for cultivating that land are rapidly aging and rapidly urbanizing, increasingly moving into cities like Lagos. We were based in Abuja. We are based in Abuja. But rapidly urbanizing, currently at a 40% rate, which is expected to go up to 50% in the next 10 years. So the labor, instead of being out there on the farm, is sitting on Lekki Bridge selling, I don't know, dustpans and all sorts of junk from, imported in from all sorts of places. And for anybody who's spent time in these countries, you see this all the time. Young people seeing opportunities in the city and making the most of those opportunities. But it's not like it's the most glamorous job, but it is the job available to them. And so typically in these types of environments where you have these significant labor constraints, generally machinery comes in to supplement that labor constraint, right? Man has always looked to machinery to help them work more efficiently, more productively. But unfortunately, in sub-Saharan Africa, there are no tractors, the machine of choice for a farmer. Africa averages around 8 tractors per 100 square kilometers of arable land. The global average is 200. Obviously, the United States has far beyond that. India is really catching up. India's doing about 550,000 tractors per year. It's an amazing trend that's largely supported by the government, but also there's a decent amount of private sector involvement as well. But unfortunately, the Africa as a region is lagging behind, and Nigeria, the agricultural powerhouse of the continent, is even lower. And it ranks, it's one of the least mechanized countries on earth, despite it being so incredibly important in agriculture. And so that leaves the farmer without the resources to maximize the land that they have access to, which in turn allows them to maximize their income, which in turn allows us to eat the food that we need to continue as a globally food secure world. And so we saw these dynamics playing out at Hello Tractor before Hello Tractor even existed, and we said, wow, the continent needs more tractors. So we took an existing design, and Peter Hobbs is in the room. Peter, one of my advisors recommended, look, this two-wheel tractor, super popular across Asia. It's an extremely versatile machine. This could actually work in sub-Saharan Africa. And so we decided we're going to start to first assemble this machine locally and sell it and put some technology on top to allow for co-sharing. Think about like an Uber model for tractors. And it was a great idea. It was just really difficult to be a tractor manufacturer. And for a variety of reasons that we can get into, if anybody's interested, we can discuss it in depth offline. But it's a challenging business. The machine is great, but unfortunately, when you import it into the region, the cost of that machine goes up by about 40%. When the cost goes up, the utilization rate needs to go up in order to reach that economic break-even point. So, and that's our job with our technology, to make sure that tractor owner is reaching enough farmers to pay for that tractor loan, if it's a finance machine, or at least earn the money back that they invested in that machine. When you increase that utilization rate, there's more wear and tear on the tractor. It breaks down. We were responsible for fixing the tractor. It was a nightmare. We had to manage our own spare parts supply chain. I'm not going to get into it. Nobody wants to hear me complain, because I can go on. I will talk to you for hours about how difficult it is to sell this machine and provide the responsible after-sales support that it needs. So I won't talk about it now, but we can talk about it maybe after the discussion. But what we did find, though, is that despite the machine having some issues, everybody wanted the technology. And primarily for larger horsepower tractors, but variety of classes of machinery, the owners wanted technology to better manage those assets. And so we decided to remove the monitoring device from our smart tractor and provide that technology as a standalone product to any tractor owner in the market. That's a play on work. Tractor as a service, software as a service. I thought that was so clever, and people were gonna laugh when I put it on there. Nobody cares. They're like, okay. It was funny to me. So, so we started selling the monitoring device as a standalone product. That monitoring device has a GPS antenna. It also has some sensors in it to measure things like engine temperature, ignition power, battery power, tractor health. And we feed that information to tractor owners. And once we doubled down on the technology, we were really able to introduce some really exciting new features that the market was asking for, but we were so busy trying to sell that smart tractor, we weren't really, it was falling on deaf ears. And so I'm gonna go through the technology that we built on top of that monitoring device, because it's really, I think that's really our core value now in the marketplace, is to make sure that if you have our tractor monitoring device on your machine, we can help you maximize the income coming from that tractor and protect that asset from misuse, from fraud, if you're a bank, from a potential default scenario, et cetera, et cetera. And what's interesting is we partner with companies like John Deere. We work with AGCO, that's a Massey Ferguson tractor, which is an AGCO brand. We're looking at Mahindra. And what's interesting is below a certain horsepower range, tractors really haven't changed over the last 50 years. I mean, these tractors, they don't come with any connectivity, none of the fancy sensors. So below that 100 to 150 horsepower range, you're not going to see any technology on your tractor. So there's a real opportunity for Hello Tractor to come in and provide that technology for the hundreds and hundreds and hundreds of thousands of tractors that are sold every year that are below that horsepower range. Now, a large combine harvester or a 250 horsepower tractor comes with all the bells and whistles. Sensors for everything from, just telling you if that leaf needs more water or nitrogen or whatever. It's pretty sophisticated stuff. However, even that technology looks at the tractor as a tool for a farmer. We look at a tractor as a tool for a business owner. And so the technology that we build on top of that is specifically designed for someone who is managing that tractor as a business and not as a tool to grow more food. That is almost a secondary consideration for us, because the tractor manufacturers do such a fantastic job of building technology for that level, the production level. We look at it as a business, almost the difference between, think about like a taxi, right? A taxi driver is thinking about earning as much money with that taxi as possible, whereas, I don't know, a race car driver wants to drive as fast as possible. Two very different considerations, two very different skill sets. And I think looking at a tractor through this lens was really kind of almost revolutionary, and something that even now the tractor OEMs don't think in that way. So we first, we looked at these smallholder driven systems, and we thought there needs to be a way to aggregate demand. We had initially a SMS booking platform where farmers could text directly into our platform, and we connect that farmer's request for tractor services with the nearest technology-enabled tractor. What we noticed was there was a natural emergence of booking agents that were texting on behalf of farmers. And the reason being was you had all these small farmers needing tractor services, but no tractor owner in their right mind would drive their machine 20 kilometers down the road to service a 1 hectare plot. And remember, that's 90% of the market is smallholder farmers. And so, but the booking agent was kind of sitting in the middle of the tractor owner and the farmer aggregating demand. So they'll say, imagine you all are all farmers over here. You say, look, it's 30 of you all need the same tractor service. You're in the same vicinity. I'll request on your behalf, aggregate that demand. So now instead of that tractor owner driving all the way across the local government to serve one farmer, they're serving 35 farmers, and it'll keep them busy for a few days. It's worth their trip. And because you're now booking at scale. So we saw that, so we invited those booking agents into our office. Well, not all of them, because there was a lot of them, but a small group into our office. And we did some human-centered design around the apps that they were looking for, what they could use, understanding everything from literacy levels to what they were most comfortable interacting with. And we came up with an application. This is our version 1.0. It's currently in production now, or currently in use now. And we'll continue to innovate around that. One of the things we had to add into the app was a voiceover, because some of the booking agents were illiterate. But as time goes on and we learn more from our customers, we'll continue to innovate around that. So this is always, like all technology products, a work in progress. Secondly, we had an Android application that allowed our little mini tractor owners to see where their tractor was, what it did, if it needed maintenance. But what we noticed is like the real tractor owners, they're fairly sophisticated. Our biggest customer used to run one of the largest merchant banks in Nigeria. He recently stepped down to create a private equity fund where at least currently, his only portfolio company is a large tractor fleet company. They own a couple hundred tractors. They've invested millions of dollars into this. Very sophisticated operation, but their end customer is still a smallholder farmer. But they're so sophisticated that interacting with their fleet through just a mobile application didn't make a whole lot of sense for them. So we, in addition to having the mobile application, we also designed a web application which provides deeper analytics, everything from tractor efficiency to, is my operator driving too fast while performing disc plow service, which obviously has a negative impact on the tractor health. Those embedded kind of deeper analytics was super important for them, and those are actually the market movers. And that went very much against our hypothesis going into Nigeria, which we thought smallholders are the farmers, they will be the investors into the mechanization market. And what we realized is that trying to organize a loan, particularly a commercial loan for a smallholder farmer who has never had any bank relationship whatsoever, not even with a microfinance institution, it's close to impossible. We tried. We organized 2 separate facilities, got term sheets in place, millions of dollars committed, no loans, 0 loans. And what we realized is that banks, there's a lot more lower hanging fruit in the market than lending to one individual. And then we were also targeting women farmers. So there were some gender dynamics at play there as well. And there just wasn't much appetite for that. And we banged our head against that wall for 2 years. We even developed some products around that I'll talk about in a bit. But what we realized is that the real customer is a more capitalized individual who still needs to serve smallholder farmers, but they have the resources to actually invest in tractor services. So our job is to boost their ROI, their return on their investment. And that's what this technology is for. The second piece, and we learned this from selling our own tractors, was managing things like spare part supply chain and managing tickets when tractors break down is a huge issue. Not only for us, but all tractor dealers in the market. Tata is John Deere's dealer in Nigeria. They struggle with this. Diesengolf is AGCO's dealer. They struggle. Case New Holland struggles. Everybody struggles. Even dealers in the U.S. struggle, but they're working from a much larger balance sheet, so they can afford to overinvest in things like spare parts. So when your tractor breaks down, they might have 15,000 tractors in their kind of catchment area. So investing in those spare parts is much easier and much more cost effective. Places like Nigeria, you may have only sold as a dealer 30, 50 tractors that year. You can't afford to stockpile inventory. And so there was a whole lot of tension between the dealers and the tractor OEMs who say, look, you're gonna sell John Deere branded tractors, you need to have John Deere spare parts, and if that tractor breaks down, you need to fix it quickly. And the dealer's saying, look, I'm not making any money on your little John Deere tractor, so fancy brand name, but there's no market for it, so I'm not gonna overinvest. What we realize is that with the technology on these tractors, we're getting real-time information on what maintenance tractors need, and also forward guidance on what spare parts are needed. So you can get as close to just-in-time inventory management, and that's far better than how tractors are currently managed in the US. So we built some dashboards around that to help these tractor manufacturers manage that. That is in beta right now, but it'll be released in 2018. And then the last piece of technology that we built was for banks financing tractors. Again, using that underlying tractor activity data to provide banks with guidance on what tractor loans are at risk of default based on activity. These tractors, again, are owned as a business, right? And so, going into that loan, the banks, they define exactly how much work needs to be done for that tractor owner to pay that loan off on time, right? It might, if it's let's say it's a John Deere 5E, 65 horsepower tractor. That machine costs about $20,000. You probably need around, 100 to 150 hectares of activity to break even, and that's after costs, financing, everything. And so you can map the activity versus the real activity versus the projected activity to get default probability scores. And anybody, if you want to dig deeper in any of these areas or you have a question, just actually feel free to raise your hand. I forgot to mention that, but this can be more conversational. And so we built some dashboards around that as well. We have one bank using this now in a pilot, but we think this can help move the needle on tractors being financed in the marketplace because the tractors are actually quite profitable. We have, in Nigeria, we have Traxi, which is the gentleman who stepped down as the CEO of FCMB Bank, who created that company. Their tractors are wildly successful in the market using this technology. Tofan, which is another customer, they're a large tractor owners association. They're generating approximately 200% return ROI over a 3-year period, which is substantial. I mean, it's actually beating the market on even telecoms and banking, some of the more attractive investments, extractive industries in Nigeria. Now, I will say this, there's a significant amount of pent-up demand. Once you work through that demand, I think you will reach a point where you actually need to start to stimulate demand, and we're not there yet, but we're trying to stay in front of that and introduce some new marketing techniques to ensure that there's a large body of farmers that need tractor services to absorb the tractors that are coming online. Each tractor is servicing approximately 250 farmers per year. I think what's really interesting about this statistic is that each machine is embedded with a GPS antenna. And effectively what we're doing is these tractors are mapping farmers' fields all over Africa. Well, particularly in Nigeria, but soon all over Africa and the world. And so we're getting some really good data on where farmers are, how large their plot size is, and their plot boundaries, and when in the season they plant. These are really important data points that previously were unavailable. What we're doing with that data is, well, we're currently working on this GIS analytics engine where we're looking at satellite imagery to know what the farmers are planting and their projected yield. It's not perfect. There's like a 30% error. So for like the economists in the room, you're like, that's terrible. But if you're Olam, or if you're, Stallion Group, or even a Cargill, knowing even within that margin where the rice is being grown, where the cassava is being grown, that's hugely important. Because again, it's very difficult to know what's happening across that last mile. And that information, I think, is going to be really one of the core value propositions for Hello Tractor moving forward. Right now, it's just the technology for a tractor owner. But what I get excited most about is every single tractor, at least 55 horsepower and above, is collecting at least 250 unique data points per year. The current tractors on our platform are delivering this service at about $75 per hectare. We're working on some financing through Lapo, which is a big microfinance bank in Nigeria. They're the biggest for the farmers that can't afford to pay that. But most can, actually, because manual labor is actually substantially more expensive. And in fact, for the farmers that pay for off-farm labor, they save about 40% per hectare on land prep services using tractors. So that's our team at Hello Tractor. That's taken outside of our office in Abuja. We actually moved outside of that office because our landlord kept cutting off like the water and power. It's like, welcome to Nigeria. You wake up one morning, you can't take a shower. So we probably like half the team is probably dirty, including myself. But that's the team there, and we're always looking to grow the team. So for the students that are interested in working on some innovative some innovative products in sub-Saharan Africa and beyond, feel free to reach out after the talk. But now I guess we can have some Q&A. Yeah. Cool. Thank you.